Hey, this is Justin with DayTradeTheMarkets.com on February 20th. Had a really nice sell-off today in gold as well, and this is part two of a two-part video series. Just doing some replays of the crude oil and then the gold market today. And so I wanted to kind of go through the gold market, looking at a 2-minute chart. Again, you can use this on any time frame from the shortest time frames to relatively long time frames, swing trading, that sort of thing. What I'm trying to go through here is just kind of go through the idea of the thought process as it's happening, what you're thinking, what you're looking at, what the evidence is telling you. How do you read that evidence with the goal of trying to make better sense of what's going on in the market real time, so that if you can see the market more clearly, you can make better trading decisions. You can stay on the right side of the market. You can avoid more losing trades, get into more winning trades, basically just increase your edge by making better trading decisions. And if you think of your job as a trader as not necessarily to make money, I know that's counterintuitive, but instead to make good decisions, those good decisions lead to the money. Okay, so don't focus on the money, don't focus on the results, focus on making good decisions, and that's what the point of this video is going to be, and that's what we believe this tool can help with. Now, with the gold heading into today, we try to take a little bit of a bigger picture view, and so yesterday's low was right around 1600, and let's look at here's a 15-minute chart going back a little ways, and I cut it off here right before the open. So you can see that we've been selling off quite a bit for several days, a week or so, and this is again a 15-minute chart looking at the 24-hour session. You can see just a level 3 buying aggression bar into a resistance zone that falters, level 3 selling with continuation. You can just see that it's selling domination until we see a little bit of two-sided action here with some buying coming into the market. And you can see we have a support zone right in here, and in the overnight session right before the open we blow right through that. Okay, so that's our context. So bigger picture down market, and so we blow through our potential support in the overnight session, and we open low. So going in, we want to ask ourselves, is what we're seeing in the intraday or during the day time frame session, does that confirm what we go into the market thinking? And if so, we want to, in other words, we're looking for opportunities to get short unless the market's evidence in the short term tells us otherwise. So if we see some confirmation of some selling aggression coming into the market, we want to know, number one, that we want to avoid any long trades to stay out of trouble, number one, first and foremost. And number two, try to get into some a short of some kind, whether that's an aggressive short, a conservative short, whether that's using simply this tool to, with what we call a level 3 retracement or a level 3 continuation or a high velocity move, a lot of different trade setups that we talk about. First and foremost, before you focus on trade setup, you want to focus on making sense of the market. Are sellers in control? Does it match our bigger picture context? Are buyers coming in? Does that make us think twice? That sort of thing. So in other words, context first, make sense of what the market's doing so you're on the right side, and then hone in on trade entry location. That's a subtle distinction, but I think it's incredibly important. So many traders just focus on, well, if A and then B and then C happens, I have a trade setup, but you don't put it in context first. If you can learn to put this is huge. This is basically what turned my trading around. Without a question, this is what turned my trading around, is when I learned that it's more important to be able to put the market in context and see what it's telling you, then hone in on, in other words, be on the right side of the market, then hone in on trade entry location. It's gonna make a world of difference. So that's what the idea here is. So again, bigger picture, down bias heading into the market. Here's yesterday's low. So we've got a gap. So we want to see, are we going to fill the gap? What's our first major structure going to be? Are we going to fill the gap and head higher, or is this going to be one of those runaway gaps where we get some evidence that comes in and we're going to head lower? So that's kind of the first question we're asking ourselves as this market opens. So let me play this forward. We'll go in fast speed, and I'll pause it when there's something we need to talk about. So again, you see that's a level 1 bar. Nothing to really, it's information. It's not something that you want to put too much stock in. It's just that extra 1% confirmation if you're already looking for something. But you don't want to put too much stock in level 1 bars. So here's some level 1 selling bars. Again, no major structure to this point. We're still waiting for something to materialize, but we're not exactly showing any strong buying aggression and looking to fill that gap. So we wouldn't just want to blindly buy so many, let me pause it. A lot of people just blindly buy gap fills or sell gap fills if it's the other way around. To me, that doesn't make much sense. You want to wait for evidence to tell you which way this thing wants to head. Is this heading one way or the other? And here's our first major piece of structure. This is a level 3 selling aggression bar. And so again, with the context of we're expecting downward action, this is kind of fitting into that. And we want to see, do we get some follow through? In other words, can the low get taken out? Can this high hold? If that is the case, then this market's poised for more selling. Okay, that's our first clue. It's evidence. It's what we're looking for. It's confirming our bias heading into the day. And now we want to just see how we can utilize that. So in other words, at this point, we want to, it's definitely telling us we want to lean toward the short side, especially if we can continue to get some follow through lower. Okay, and again, what would that mean? That would mean, number one, avoid long trades. Number two, find a way to get short, whether it's through a method that you're using that this information simply confirms that you want to be on the short side, or whether it's looking for one of the trades that we talk about using this software itself. Okay, but again, first and foremost, put the market in context. Which side's in control? Just knowing that information alone can save you so much in losing trades and can really help you get on the right side of the market. So let's start this up again. Okay, and you can see we're getting some follow through lower beneath the low of the level 3 selling bar. So we just want to keep playing this forward and see. Okay, another level 3 selling aggression bar. Let me pause this here. There's a couple different trade ideas. Again, if you already use a method and you just want to use this as confirmation that their bears are in control, that's ideal. A lot of people that use this software do it that way, and it seems to work very great for them. If you want to use this as a standalone, which you can certainly do, a couple of options you have here. Number one, we know that we want to be on the short side. That's pretty clear at this point. If we get, this is what we call a level 3 continuation trade. You have a level 3 bar that has immediate follow through. The high is not even tested. You can look to be getting long around the high of that, or getting short around the high of that bar. That happens to also coincide with what we call a level 3 retracement, which is my favorite way to trade, which is waiting for a pullback to the high of a selling level 3 bar right here. So you can see pretty good opportunity to get short somewhere in here. It's kind of a combination of a level 3 continuation trade and a level 3 retracement trade. Okay, so pretty interesting opportunity there. Again, I don't want to focus too much on trade entry. That's not the point of this. The point of this is really just to help you see, talk about staying on the right side of the market. Okay, so let's play this forward. Okay, here's first support resistance zone here, and you can see the yellow on the bottom means caution. Normally that'd be green for support, but it's saying there's a lot of weight on this market, so we want to monitor it, but don't expect it to act as great support. Okay, so now again we have another wave of selling. Can the high, this first level 3 bar gets taken out, but it's a part of a wave of another sell. So we till this one gets taken out, we're still certainly leaning toward the downside. Here is a resistance zone. So let me just pause it here. This is another way of looking at getting into the market, kind of what we call a confluence type of a setup where things really line up. So again, bigger picture bias is down, filter dark red. We've got really good selling structure here. We know the high of these level 3 bars should act as support. It also coincides with a red resistance zone. We get deceleration. You've got a lot of things really coming into play right in this area. So that's also certainly, does it mean that trade's going to work out 100 times out of 100? No, but it's going to work out a high percentage of the time. You're putting the probabilities in your favor with actual evidence. Okay? Hopefully that makes sense. Let's play this forward again. So again, caution zone down here. We get a little support, but you want to, tread with care. If it's not green, if it's yellow, it's kind of like now again, another breakdown on a level 3 bar. Pretty clear sellers are pretty well in control at this point. And until we have a selling structure that, gets its high taken out and some buying structure comes into the market, you can see, if I pause it here, you can see so far what have we had in terms of level 2 or level 3 bars. And, by that, let me just bring this over here. You can pause this and look at this more in depth if you want. But in terms of level level 2 bars, dark green, are buying level 2 bars, strong buying and selling aggression. Dark red is a level 2 selling. Blue is an extreme buying aggression bar. Magenta is an extreme selling aggression bar. So let's look, how many blue or dark green bars do we have on this chart so far? Well, this is our first one right here so far. Okay, that's the first buying of any import that we've seen at all. Okay, and so we want to see, can this get some follow through? This bar here, it's our first bit of buying evidence. That doesn't mean buyers have taken over by any means. It just means that this pure wave of selling would have come to an end because we're actually seeing a little bit of buying. Okay, so again, and also if you are short from say here or say here, again from say here or here, then this is your first piece of evidence that you want to be careful, and it might be time to get out of that trade. Okay, that's another way this software can really help you, in my opinion. I've really enjoyed it. It helps me stay in trades a lot longer. In that I don't get freaked out. I wait until I actually see some evidence that the reason I got into the trade is not really valid anymore. Okay, and so this is our first potential bit of buying that's coming into the market. So we just want to monitor that. Okay, so let's play this forward again. Okay, so we're starting to get some follow through there. Again, until we can take out the high of this level 3 bar here and this resistance zone, you would not by any means say bulls are coming in. It's just our first clue, and you can see that was taken out quickly. So more selling is coming in at this point. Can we get some more follow through lower? That's the next thing we're looking at. A little bit. But here you see again, here's another potential attempt by the market's auction low enough to attract a little bit of buying. Can we get some follow through higher off of that? Let's see. And what would that mean if we did? It would simply mean that the pure wave of selling is over and that we're into more two-sided action. Okay, so we're starting to get a little follow through higher. Here's our first level 3 buying bar. Okay, so showing us that some buying is coming into the market until we can, I apologize, until we can take out, this resistance zone here and the high of this wave. We still have to use caution. We're basically in a two-sided market at this point. We want to see how the market reacts at this resistance zone. But you can see again, knowing that the market's two-sided with some buying, it's auction low enough to attract some buying is certainly good information. It can help us get out of a short trade. It can prevent us from getting into another short too quickly. Okay. So again, bigger picture bias, we're still down. Most of our structure so far has been bearish. We are starting to see a little bit of bullish activity though. So now we're into more of a consolidation mode, more of a short-term consolidation. And another way you can define that would be, to kind of look at, here's a selling wave that went to here. Now we've had a buying wave. So we're in and essentially what the software's showing us anyway, we're in a consolidation, and we want to see how the market does when it tests any of these areas, the high of this area or the low of this area. Okay, because you can see we had a vertical move, sellers were in control. Now it's two-sided or horizontal consolidation, if you will. Okay, two different strategies. That's what I talk about when I talk about context. Two different strategies are required in a consolidating market short term versus a vertical market short term. When it's vertical, you want to hop on board. When it's a consolidating market, you want to be kind of fading that type of market on the extremes. Okay, and this is stuff we talk about in our training. I wouldn't expect you to understand all this right now. That's not the point. I'm just trying to give you the idea, because some people that are watching this is going to resonate. Yeah, this is a tool I can really make sense of. Some people are looking for more certainty, more black and white, tell me what to do sort of thing. And that's not really what this is. This is a tool. Okay, this is a tool that's going to help you make better decisions. And we talk about and teach all the time about how to make sense of this, how to read this, kind of learn this thought process. Okay, but it's not some magic system, some magic tool. Okay, or some magic. It's so many traders, and I fought this for a long time. Just as an aside here, So many traders are looking for certainty. They're looking for this black and white robotic rule set, okay? And that makes sense. As humans, we want certainty. We want to be able to make sense of things. Unfortunately, trading is a very uncertain proposition. There is no certainty in trading. What there is, and here we're to the close of the day, what there is in trading is probabilities. You want to try to put the probabilities on your side. Now, certainly we feel, and a lot of people agree with this, that this tool can help you put the probabilities on your side. Does it give you certainty? No. Am I saying to you, if you use this tool, you're going to be rich by next Thursday? That's not what I'm saying. What I'm saying is this is a tool that can help you increase your edge. If that's something you're interested in, we can talk further about that. I can give you more examples. I just wanted to kind of spell that out. Hopefully this made sense to you. Hopefully, at least again, I wouldn't expect every single thing I talked about to make sense, but just generally speaking, the idea of what's the evidence telling us, which side's more aggressive right now? Is there follow through? Is there rejection? How does the market react compared to how we think it's going to react? That type of thought process, if that interests you, then shoot us an email and we can discuss it further. Otherwise, hope you have a great rest of the evening and a great Thursday, and we will talk soon. Thanks.